2023 was a pretty crazy year in the stock market. We had the S&P 500 rallying almost 25% for the year, and my portfolio in line with the S&P 500 did very well. So what I wanted to do today was do the regular monthly dividend stock portfolio update, have a look at the performance of my stock portfolio against the benchmark or the S&P 500, and then go through what my plan is for 2024. So if that's something you would be interested in watching, I encourage you to watch this video and give me a thumbs up and a subscribe if you like the channel. So without further ado, let's go and dive right into the content. So we're going to start with the regular monthly portfolio update. So what dividends did I receive here in December 2023? So I got roughly $34.19 of dividends in this specific YouTube dividend growth portfolio. So who paid me? I started with Visa, ticker V. They paid me on December 1st, roughly $2.97. ADC or Agri Realty paid me in mid-December, roughly $5.33. We had Home Depot. They paid me roughly $6.34 on December 14th. Microsoft here paying me around the same time as Home Depot and ADC, and Microsoft paid me roughly $7.48. We had Realty Income, or O, the monthly dividend company, paying me $4.37. We had UNP and CNR, two railroads here, paying me $4.79 and $2.91 respectively. So that made up roughly $34.19 in dividends this month. A little bit slower month in terms of dividends. Now, what did I do with those dividends? Well, I took those dividends and I reinvested those. So I made some buys. Again, this portfolio I just set auto dividend reinvest or auto buy. Once I receive dividends, they just go back and buy additional shares of that same company, thereby allowing me to take advantage of that investing on autopilot and build that dividend snowball. So I really just bought all of these tickers that you saw that I received dividends in, using that dividend funds and buying additional shares. So as you can see, the shares that they bought were not huge, but again, this is how compounding begins in this portfolio. It's small, but it will grow at a steady and significant rate. So Visa, I got 0.01 shares of that. I got ADC at roughly 0.09 shares, Home Depot 0.02 shares, Microsoft 0.02 shares, Realty Income 0.08 shares, UNP 0.02 shares, and CNR 0.03 shares. So roughly that was that $34.19 that I got in dividends, and I reinvested back to these companies. Money well spent here in my opinion. So let's go and look at my portfolio. Now, this is my investment tracking spreadsheet. So we're going to look at this in terms of performance and also each sector again as we do monthly. So let's go and look at the performance first. So to do that, I'm going to go and click into my individual holdings. And again, this is all of my holdings, the different stocks that I own in this portfolio, and the percentage gain or loss that I am up in each of these holdings. And with the current market strength, I am actually up in all of my positions and pretty significantly in some positions as well. And as you can see, my total portfolio performance is up almost 21%. So that's great, but I want to benchmark that against the S&P 500, because what I could have alternatively done is just bought an index fund that tracked the S&P 500, such as VOO, and I could have just dollar cost averaged my way in and kept buying that along the ride, and that would have saved me a lot of time instead of making all these spreadsheets and buying all these different stocks. But the reason why I do this is I want to outperform that benchmark or the S&P 500. So I had roughly 21% performance here for this for these holdings, and the time period for that was roughly from the beginning of April 2022. So let's see how the S&P 500 did in comparison to my portfolio. So when I go to April 1st, 2022, and I check the percentage gain or loss of the S&P 500, so it's up roughly 5%. So comparing that 5% gain against my 21% gain here over that same time period, I am outperforming the benchmark or the S&P 500 by roughly 16%. So I think I've done a great job. I like my holdings, and I'm going to continue following this methodology of investing. So what are my individual holdings? So let's go through them. And again, if you follow my channel, I have videos on basically all of these holdings, so I encourage you to go back. I'll leave links in the description to the various videos, and then you'll also see links throughout the video popping up. If you haven't watched those videos, give those a great watch. I go into depth into each of those businesses fairly commonly, and they are great videos to watch for educational and entertainment purposes. So Microsoft, my largest holding here, I'm up roughly 43%. Microsoft, one of the greatest companies in the world. Their cloud services that they offer for companies and for storage and etc. just growing at a significant rate. They have their foothold in the Office software. That's your Outlook, Excel, Word, various their Microsoft operating systems, even their computers. And again, with their focus through Chat GPT and AI, I think is only going to continue to accelerate the growth of this company. Next, we have Brookfield Corporation. And I made various videos on Brookfield Corporation, the second largest holding here. And when you take it in aggregate with Brookfield Asset Management, these two here, I think, are crown jewels in my portfolio. I'm up roughly 29% on the corp and roughly 22% on the asset management side. So again, significant gainers here. I think that, these types of companies, or Brookfield in particular, with their management expertise of Bruce Flatt, their CEO, their rich history of owning various alternative assets such as infrastructure, other data centers, private credit, now with their reinsurance or insurance business growing, I think they're just going to be a powerhouse for the next 20 years. Next, we have Apple here. So Apple, I'm up roughly 31 or 32%. And again, Apple, I don't really need to go into detail here, but they have a monopoly on your phone, the App Store, wearables. They have the headset coming out. Again, they haven't really shown much to me in terms of AI and future growth, but just through the enormous amount of cash flow that they do and buybacks, I think their stock price performance in the future is at least going to be in line with the overall market, but will probably exceed that if they do produce other significant products. And again, this is Apple we're talking about. I think that the chance of them producing greater products in the future is higher than that of them not producing great products. Next, we have Amex, so American Express. Here again, I think it was a undervalued company when I bought it. I'm up roughly 25%. Nothing really too crazy in terms of my expectation of stock performance for Amex. I think it's going to do very well, probably in line with the market. I just saw an opportunity here at how cheap it was, which I thought as a great opportunity to buy and can probably therefore compound my future returns. It's a card issuer and a payment processor. So again, it does bear the risk or credit risk, but its customers are usually more affluent. Which basically means that they have a lot more disposable income, and then therefore they can pay off those credit cards, and the credit losses that Amex will probably take should be a lot lower than traditional credit card issuers. And again, they make those nice fees on that payment processing. So here we have CP Rail. So CP Rail, one of these great companies. Again, I just did a video on them as well. They merged with Kansas City Rail, and they now have the only railway to go through Canada, US, and into Mexico. I think they're going to be performing super great in the future. I see a lot of secular tailwinds for this company, and again, an oligopoly here with the other railroads. JP Morgan, the largest bank in North America here by assets, and again, I'm up 49, almost 50% here. Saw another opportunity where it was super cheap, trading at a super low valuation, and I just thought it was a steal, so I had to buy it, and I think that it's going to continue to compound over time. Jamie Dimon, one of the best CEOs I've ever seen in my life, so I think that they're going to do great things. Brookfield Asset Management, we went through already when we looked at Brookfield Corporation. Costco, again, Charlie Munger's favorite business. I'm up roughly 54, almost 55% here. This, you have a great business when the parking lot is always full. People are continually buying products. There's lines at each register, and they're buying way more than they expected to. So Whenever we go to Costco and we think we're going to buy one or two things, our cart ends up filling up and we end up paying 3 times as much because of the great value proposition that Costco offers. We see so many things on sale and we just have to buy them. So us as consumers, we think it's a great deal and the company makes money on us in terms of our membership and the small margin on those products. So a great business, one of the best businesses I've ever seen. Visa here, again, looking at Visa and MasterCard together. These are payment processors. Visa, I'm up roughly 32% here. MasterCard, a super small position, up roughly 16.44%. But these are payment processors, very capital light businesses. They have great margins, net income margin roughly around like 50%. So again, these margins are some of the biggest margins I've ever seen, and their businesses are highly scalable, therefore speaking to that large margin. Great dividend growth, great share buybacks, huge free and growing cash flows, and again, inflation protected businesses. As inflation rises, prices of goods also rise that consumers purchase, and therefore Visa and MasterCard are getting a larger chunk of the pie in terms of the payment processing fees. And again, I made videos on these as well. Vici Properties, again, I can look at Vici Properties, Agri Realty, and Realty Income here probably all together. Again, I saw an opportunity in REITs, Realty Income in particular. It was super undervalued, I thought, but Agri Realty and Vici Properties as well. In 2023, with those high interest rates, REIT valuations, came down like a rock. That is expected with interest rates, but like I believe, and hopefully a lot of other people might see that as well, it's probably reflected in the market by now, but interest rates are not going to stay this high for that long. I think the market has got a little aggressive, pricing in more interest rate cuts than we will likely see. But again, I'm not complaining. Vici Properties, I'm up roughly 6%, Agri Realty up almost 3%, and Realty Income, I am up 15%. And this is just the price return, not the dividend. So adding the dividend on top is like the cherry on the pie for these REITs. So again, I think they're great businesses. Vici Properties, great properties in the Las Vegas Strip, in the gaming and entertainment industry. Basically irreplaceable properties in my opinion. Agri Realty, this is essentially, in my opinion, like a smaller Realty Income. They have a lot more avenues for future growth because they are smaller, and I think they're going to continue to deliver. Realty Income, just classic steady Eddie dividend income monthly that I can reinvest and buy back additional shares. Then we have Lowe's and Home Depot. So Lowe's and Home Depot, the duopoly here in terms of home building and home renovation. Whenever I have something that I need done in terms of home building or home renovation, I get sent out to basically Lowe's or Home Depot, and I go out there and I buy their products. I'm up roughly 13% on Lowe's and 15% on Home Depot. These again are great businesses. Again, when you look at my portfolio, you'll see that I tend to focus on specific sectors and buy the best businesses in those sectors. So Lowe's and Home Depot having the largest market share together. And when we look at the railroads, I have CP Rail, I have Union Pacific, Canadian National Railway, REITs, I have a bunch of REITs in here. And then again, with the payment processors, I decided on Amex, Visa, and MasterCard. So again, you'll see a lot of overlap, but it's because I like those specific businesses in those specific sectors. And I think, well, why not own the top 2 or top 3 in those sectors if they're all great companies? Next, we have TD Bank and National Bank. So Canadian banks here, again, just some of the greatest oligopolistic businesses I've ever seen. Great dividend payers, steady dividend growers. They've been paying dividends for over 100 years, in operations for over 100 years, and they are integral to the Canadian economy. So I don't see them going anywhere anytime soon. I'm up roughly almost 5% on TD and 10% on National Bank. Here we have Bank of America. Probably could have looked at this with JP Morgan, but Bank of America, I'm up roughly 20%. I bought it because it looked super undervalued. It was trading at a price to earnings of roughly 9, or I think it might have even got lower than that. And the price to book was super low. It might have got close to 1. So I saw an opportunity there and I decided to add this company. I think it's a great company. I think there was an overreaction to their HTM or held to maturity bonds or securities that they bought. A lot of people thought that those unrealized losses were going to hit their balance sheet and result in a large loss of cash. And again, I think they're holding out those securities all the way till they mature, and there will not be a risk there. So I think it was an overblown risk. The market reacted negatively, and I saw an opportunity to buy Bank of America, Union Pacific, and Canadian National Railway. So again, great railroads. Like I said, I'm up roughly 24% here and 16% here. So again, these are just great oligopolistic companies. The railways are just a very efficient way to transport our goods, and I don't see that changing anytime soon. American Tower, so cell tower REIT here, very scalable. They're going to be continually expanding across the world through the rollout of 5G and additional networks. Saw another opportunity here, got super cheap because of the interest rate hike. And these cell tower REITs like American Tower or Castle, they never really go on sale. So I saw this opportunity and I bought as many shares as I could, and I'm up by roughly 30% on that. Google, one of the best businesses in the world. It has YouTube, it has Google search, their ads. Again, they're building up their cloud business. It was finally profitable in their last quarter, and it's going to continue to grow in profits, in my opinion. I'm up roughly 14% there. MasterCard up roughly 16% there, and I have my cash split between US and Canadian cash. So that is the total gains in each of these stock holdings. Now, if we go back to the overview tab here, and I'm going to make this a little smaller. There we go. So these are the sectors that I've invested into. So tech being at 18%, alternative asset management at 13%, real estate at 12%. So I did buy heavy into REITs, and I think that's going to pay off in the future. I'd like to see this probably roughly at like 8% going forward, but because I bought into these REITs, I think at great valuations, that's going to pay off over time. Cash, like we saw, was roughly about 10% of my portfolio. I'm keeping that for opportunities. 5% is kept in Canadian cash for Canadian securities, and 5% is kept in US cash for US securities. Consumer discretionary here, we have payment processing, railroads, US banks, and Canadian banks. Now, the current stock allocation. So we can see here that the current stock allocation, Microsoft is at 10% of my portfolio, Brookfield Corporation is at 8%, and then we have Brookfield Asset Management at another 5%, so Brookfield being my largest position at roughly 13%, Apple at roughly 7%, American Express at 6%, CP Rail at 6%, JP Morgan at 5%, Costco at 4%, Visa at 4%, Vici at 4%, Agri Realty at 4%, Lowe's at 3%, Home Depot at 3%, Realty Income at 3%, TD at 3%, National Bank at 3%, Bank of America at 2.5%, UNP at 2.5%, CNI or CNR at 1.6%. We have American Tower 1.5%, Google at 1%, MasterCard at 3%, and then the rest being Canadian and US cash. So that is my stock allocation. And if you want to look at the actual dividend income by each of these stocks, you can look at that here if you like as well. The REITs really do pay me out the large portion of my dividend or current dividend income, followed by the banks. Again, this is as expected. REITs pay a lot of their AFFO or current dividend income out to shareholders. That's how we are rewarded as shareholders in REITs, and lower capital appreciation. And the same with the banks here as well. And then a lot of the other lower dividend payers, but higher dividend growers here in the back half of the pie. So if we scroll down, you can see that I am up roughly 21% here in this portfolio. And the current dividend yield is only 1.86% because we've had such a run up in prices. So that was my portfolio review. And again, you can see the dividend income here if you like, and the market value of this portfolio in Canadian dollars, roughly 57 or 58 grand, and I'm up roughly $10,000 there, representing about a 21% gain here. Now, what is my plan for the future? So when I look at this portfolio, I think I've done a great job constructing the portfolio that I want. I have the stocks that I like. I like the percentages, approximately the percentages that I have of each of these stocks, but I'm always looking for future opportunities. So I've made a watch list here. And again, as you can tell, I've added some of these, but I don't have the full percentages that I want. So if opportunity does present itself in 2024, I'd like to increase my MasterCard position. I'd like to increase my CNI or CNR position. I'd also like to add possibly EQ Bank. I made a video on EQ Bank last week, I believe. And again, I think it's a great bank. It's just trading a little bit higher than I would want it right now. And I might dollar cost average into this position. I think that it's going to be a great compounder of total share price appreciation and dividend growth. Alphabet, again, I have a small position like you saw. I would like to increase that position at least twice of my current position. I think it's 1 or 1.5. I like to get it to maybe 2.5 or 3. That'd probably be best for me. And again, if any of these other companies go on sale, like Berkshire Hathaway, ATD or Augmentation Couche-Tard, S&P Global, I'll be watching for these Moody's as well. And if they do go on sale, then I might add those. So that's my watch list. That's what I'm looking for. And in terms of my overall investing style, I'm not going to change anything for 2024. 2023 and half of 2022, I guess, that actually ended up working out great for me. Like you saw, I outperformed the S&P 500 by 16%. So I'm going to keep doing what I'm doing. I'm going to buy quality cash producing companies at fair or discounted prices. I'm not changing anything that I do. It's been working great. So I'm going to just continue doing what I'm doing. And if I stay disciplined, I think that this approach will pay off. So that was my review for the month and for 2023. Now let me know your thoughts on this review. If you had any comments or questions, how do you think I did? Is there something you would have done differently? What are you doing for 2024? Let me know in the comment section below, and I will see you in the next video. Have a great new year. Thanks. Bye. Please note, I am not a financial advisor by any means. All of this content is merely for your entertainment purposes only. Investing is inherently risky, so please do your due diligence when investing, as you may lose money, and I am not responsible for any investing losses or decisions you make or incur. Thank you. Have a great day. Bye.